Thinking about buying a home but you don't know where to start? What about if you first apply for a mortgage loan? If you don't have any idea on how to apply for a mortgage loan, this video is just for you. As you prepare to apply for a mortgage, you will come across terms like pre-qualification and pre-approval. It's essential to understand what these terms mean. They will guide your home search and help you focus on homes you can afford. When the time comes, they can also help you decide how much to offer and show the seller that you're a serious buyer. At the most basic level, pre-qualification and pre-approval are type of mortgage approval, and they refer to the steps a lender takes to verify that a client can afford a mortgage. Hi everybody, I am Darlene Medranda, a real estate salesperson with Ian Alexander Real Estate Team and eXp Realty in the lovely Long Island, New York. Today, I wanted to talk about what is pre-qualified and pre-approved terms and what do they mean in a real estate transaction. You have probably heard that you should be pre-qualified or pre-approved for a mortgage if you're looking to buy a property. These are two key steps in the mortgage application process. Some people use the terms interchangeably, but there is an important difference that every homeowner should understand. Pre-qualifying is just the first step. It gives you the idea of how large a loan you will likely to qualify for. Pre-approval is the second step, a conditional commitment to actually grant you the mortgage. The pre-qualification process is based on consumer-submitted data. Pre-approval is verified consumer data, for example, a credit check. Here are all the details on the differences. Pre-qualification is based on data submitted to a lender, which will provide a ballpark estimate of how much you can borrow. Your pre-qualified amount isn't a sure thing because it's based only on the information you have provided. The lender won't take a close look at your financial situation and history to determine how much mortgage you can reasonably afford until you reach the pre-approval stage. You will receive a conditional commitment in writing for an exact loan amount after you've been pre-approved. Getting pre-qualified involves supplying a bank or lender with your overall financial picture, including your debt, income, and assets. The lender reviews everything and gives you an estimate of how much money you can expect to borrow. Pre-qualifications can be done over the phone or online, and there is usually no cost involved. It's quick, usually taking 1 to 3 days to get a pre-qualification letter. Keep in mind, that loan pre-qualification does not include an analysis of all your credit report or an in-depth look at your ability to purchase a home. The initial pre-qualification step allows you to discuss with your lender any goals or needs you might have regarding your mortgage. Your lender can explain various mortgage options and recommend the type that might best suit your situation. Your pre-qualified amount is not a sure thing because it's based only on the information you have provided. It's just the amount for which you might expect to be approved. A pre-qualified buyer doesn't carry the same weight as a pre-approved buyer who has been thoroughly investigated. Pre-qualifying can nonetheless be helpful when it comes time to make an offer. A pre-qualification letter is all but required with an offer in our market. Sellers are savvy and they don't want to get into contract with a buyer who can't perform on the contract. It's one of the first questions I ask of a potential buyer. Have you met with a lender and determined your pre-qualification status? If not, we advise options for lenders. If so, we request and keep on file a copy of the pre-qualification letter. Loan pre-qualification is based solely on the information that you hand over to the lender, so it doesn't mean much at all if you don't provide accurate data. Getting pre-approved is the next step, and is much more involved. A pre-qualification is a good indication of creditworthiness and the ability to borrow, but the pre-approval is the definitive word. You must complete an official mortgage application to be pre-approved, and you must supply the lender with all necessary documentation to perform an extensive check on your financial background and current credit rating. The lender can pre-approve you for a mortgage up to a specific amount after reviewing your finances. You will also have a better idea of the interest rate that you will be charged on the loan at this point, because this is often based in part on your credit score, and you might be able to lock in an interest rate. Some lenders charge an application fee for pre-approval, which can amount to several $100s. You will receive a conditional commitment in writing for an exact loan amount, allowing you to look for a home at or below that price level. This obviously puts you at an advantage when you are dealing with a seller because you are one step closer to getting an actual mortgage. Keep in mind that you don't have to shop at the top of your price range. Depending on the market, you might be able to get into a home you like for less money than you were pre-approved for, leaving you with extra cash each month to set aside for retirement, the kids, college funds, or checking something off your bucket list. Here is a quick rundown of how pre-qualification and pre-approval differ. The other advantage of completing both steps, pre-qualification and pre-approval, before you start looking for a home is that you will have a good idea in advance of how much you can afford. You won't waste time looking at properties that are beyond your means. Getting pre-approved for a mortgage also enables you to move quickly when you find the perfect place, and it lets the seller know that your offer is serious in a competitive market. You will give your lender a copy of your purchase agreement and any other documentation necessary as part of the full underwriting process after you have chosen a home and made an offer. Your lender will hire a third-party certified or licensed contractor to do a home appraisal to make sure the house you want to buy is worth the amount you are going to borrow. The final step in the process is a loan commitment, which is only issued by a bank when it has approved you as the borrower, as well as the home in question, meaning that the property is appraised at or above the sales price. The bank might also require more information if the appraiser brings up anything that should be investigated, such as structural problems or a faulty HVAC system. Your income and credit profile will be checked once again to ensure that nothing has changed since the initial approval. So, this isn't the time to go out and finance a large furniture purchase or a new car. A pre-qualification is a good way to get an estimate of how much home you can afford. And a pre-approval takes it one step further by verifying the financial information you submit to get a more accurate amount. Getting approved early in your home search is a great way to know what you can afford, so you can narrow in on your dream home. I will suggest you get pre-approved by a lender in person if possible. This way you have the opportunity to ask as many questions as possible. My name is Darlene Medranda with Ian Alexander Real Estate Team and eXp Realty. Thank you so much for watching. If you like this video, please share. Be sure to hit the subscribe button, give me a thumbs up, and leave a comment below. I post a new video every week about real estate tips. And remember, my clients' dreams are my priorities. Thank you, and I will talk to you soon.